People keep asking the same question over and over again. Is XRP about to be replaced? Is Ripple losing its position? Is there a new technology coming that could take over what XRP was designed to do? These are real questions, and today we're not here to create fear, hype, or false promises. We're here to talk calmly, logically, and realistically about where XRP stands, what the market is doing, and what changes might actually be happening behind the scenes. XRP was created with a very specific purpose. It wasn't built to be digital gold, and it wasn't designed to replace traditional banking completely. Its core idea has always been speed, efficiency, and low-cost cross-border payments. For many years, XRP held a unique position because it could settle transactions in seconds, at a time when most blockchains were slow and expensive. That advantage helped XRP gain attention from banks, institutions, and payment providers around the world. But technology never stands still. What was considered revolutionary 10 years ago can become normal today, and that's where the conversation about XRP being replaced really begins. Not replaced overnight, not erased from existence, but challenged by newer systems that are trying to solve the same problems in different ways. In recent years, we've seen a rise in alternative blockchain networks that focus on fast settlement, low fees, and scalability. Some are public blockchains, some are private, and some are hybrid systems built directly by financial institutions. Central banks are also experimenting with their own digital currencies, often referred to as CBDCs. These are not cryptocurrencies in the traditional sense, but they aim to modernize cross-border payments and settlement systems. This is important because XRP's original target audience was institutions, not retail traders. If banks and governments build their own systems, naturally people will ask whether XRP is still needed. That doesn't automatically mean XRP is obsolete, but it does mean the competitive landscape is changing. Another factor is regulation. In the United States especially, regulation has played a massive role in shaping XRP's public perception. Legal uncertainty slowed adoption, discouraged partnerships, and made institutions cautious. While other projects continued to evolve rapidly, XRP spent years navigating legal challenges. Time matters in technology. Delays create opportunities for alternatives to step in. At the same time, it's also true that XRP has survived where many other projects have failed. Despite market crashes, regulatory pressure, and intense criticism, XRP remains one of the most recognized digital assets in the world. That alone tells us something important. Replacement isn't as simple as building something faster or newer. Networks depend on trust, integration, and long-term relationships. When people say XRP will be replaced, they often imagine a single coin or project completely taking over XRP's role. In reality, markets don't usually work that way. What happens more often is fragmentation. Different solutions handle different use cases. Some systems are optimized for government settlements, others for banks, others for private companies, and others for decentralized finance. It's also worth noting that Ripple, the company associated with XRP, has been shifting its strategy. The focus has expanded beyond just XRP as a bridge asset. Liquidity solutions, software infrastructure, and compliance-friendly tools are becoming more important. That suggests adaptation, not abandonment. Meanwhile, newer blockchains are marketing themselves aggressively. Faster finality, more throughput, smarter contracts, better interoperability. All of this sounds impressive, but adoption is harder than technology. Financial systems are conservative by nature. They don't change overnight, and they don't switch systems without extensive testing, trust, and legal clarity. Another key point is that XRP doesn't need to dominate everything to remain relevant. Even a small percentage of global payment flows would be massive in scale. The idea that a project must be number one or it's a failure is a retail mindset, not an institutional one. That said, competition is real. Stablecoins are now widely used for cross-border transfers. Tokenized assets are gaining attention. Real-time payment systems are improving at the national level. All of these reduce the urgency for a single global bridge asset. The world is becoming more modular, not more centralized. So is XRP being replaced, or is the role itself being redefined? That's the better question. The market XRP was targeting is evolving, and XRP has to evolve with it. If it doesn't, then yes, it risks becoming less relevant over time. But relevance isn't binary. It fades gradually, or it stabilizes into a niche. From an educational perspective, it's also important to separate price speculation from utility discussion. A project can have real-world use and still experience price volatility. Likewise, hype alone doesn't guarantee long-term survival. History has shown that repeatedly in the crypto space. Another thing often ignored in these discussions is global diversity. The US market gets most of the attention, but payments are global. Emerging markets, remittances, and international trade operate under very different constraints. What doesn't work in one country may be extremely valuable in another. When you zoom out, the idea of replacement becomes less dramatic. Technologies overlap, some fade, some adapt, some coexist. XRP may not be the only solution anymore, but that doesn't automatically mean it has no place. What matters going forward is execution, real partnerships, real transaction volume, regulatory clarity, and continued development. Without those, any project, old or new, will struggle. With them, even a challenged project can remain relevant. This conversation isn't about telling anyone what to buy, sell, or hold. It's about... So when you hear someone say XRP will be replaced, don't hear it as a final verdict. Hear it as a signal that the market is changing. Then ask the deeper questions. Who is building? Who is integrating? Who is actually being used, not just talked about? Because in the end, replacement isn't about headlines. It's about utility, trust, and time. And time, more than anything else, is what will decide XRP's future. People keep talking about one idea again and again, that XRP will be replaced. Some say it with confidence, others say it with fear, and many repeat it without really explaining what it means. So let's slow this down and look at it clearly, without hype, without panic, and without making claims that don't belong in a serious conversation. XRP was created to solve a very specific problem: fast, low-cost cross-border payments. For a long time, that made XRP stand out. Transactions were quick, fees were low, and the network was designed with institutional use in mind. That gave XRP a unique identity compared to many other digital assets that focused more on decentralization or store value narratives. But markets don't stay frozen. Technology evolves and competition increases. Today, there are more blockchain networks offering fast settlement, stablecoins being used for transfers, and even traditional payment systems improving their speed. Because of that, people naturally ask whether XRP's role is shrinking or being challenged. The word replaced is often misunderstood. Replacement doesn't usually happen overnight, and it rarely comes from one single competitor. Instead, what happens is diversification. Banks, companies, and governments don't rely on just one solution. They test multiple systems and choose what fits their specific needs. In that environment, XRP isn't necessarily removed. It simply isn't alone anymore. Another important factor is regulation. Regulatory uncertainty slowed XRP's momentum, especially in the United States. During that time, other technologies continued to grow and experiment. That gap created the perception that XRP fell behind. But perception and reality are not always the same thing. Even with challenges, XRP remains widely recognized and actively discussed, which shows that it hasn't disappeared from the conversation. It's also worth noting that Ripple, the company connected to XRP, has expanded its focus. The strategy today includes software solutions, liquidity tools, and compliance-friendly infrastructure. That suggests adaptation rather than abandonment. Successful technologies usually survive by adjusting, not by standing still. Another point people overlook is scale. XRP doesn't need to handle all global payments to remain relevant. Understanding how fast this space changes and why absolute statements rarely age well. The crypto industry is still young, narratives shift, use cases evolve, and today's threat can become tomorrow's collaborator.